measures after what happened in the end of September and the ILFS to infuse liquidity in the system. But it's more now a matter of rebuilding confidence in the system, rebuilding confidence that if you lend to NBFCs, your money is not going to be down the drain. And I find this that RBI will have to increase its liquidity to the NBFCs. So one of the suggestions that we could have is that if RBI opens up a special window that can be of funds which can be lent to NBFCs, or if it can be that RBI takes a first loss of say 10% and lets banks ask them to lend more to NBFCs. Besides that, the RBI can also look at creating a whole special purpose vehicle which can lend some funds to NBFCs on a short-term basis. They can buy over the commercial papers which the NBFCs are due and give them, refinance them. They could take a fee if they like, but these are some of the measures that the RBI would have to do. Besides, there is the ECB route. If they can relax that ECBs today, companies can raise, housing companies can raise only if they give for affordable housing. Can they make it for all real estate? These are some of the measures which are.
In fact, larger companies such as yours, in the last couple of months, I'll say 2.5 quarters, have changed the mix of the sourcing of your capital via NCD and ECB. But smaller NBFCs are not being able to, go for. So, do you think that in their inability to source funds, their business models will get questioned, and that could actually spur a lot of M&A, forced M&A of sorts in the system, in your view?
So I think clearly there's going to be consolidation that's going to take place in the NBFCs. Actually, if you see post the IBC, consolidation is taking place in almost every sector of the industry. If I look at steel, look at all the cases that went to the IBC. These were the not well capitalized, not so well run companies, some of them smaller. And who were the bidders for that? It could be either a Tata or a JSW and Arcelor. So similarly, consolidation has taken place across industries. I see this in the NBFC space as well. And over time, I think you will see the larger ones becoming larger and some of the smaller ones which are not well capitalized or which don't have as good an asset quality as should be, they would find it very difficult.
Yeah, in fact, veterans are already calling it that it will become a big boys game alone. So you are very well capitalized. You are one of the key players, be it rights issue money or other money sitting on the books. You are, we understand, also being approached by different players, parts of business of Diwan or any other. Are you evaluating such proposals, or what will attract you to any such piece of the business?
So we are very clear in this. Generally, we are known to be the people who do a fair amount of mergers and acquisitions in other industries. But in the finance sector, I have said this often, that we would take a very conservative approach in this, because first of all, I think in financing, what is most important is that the culture and the values that the organization and the people who work in that organization have. And secondly, that it has to be very important for us to be able to look at the quality of the book in granular detail. And unless and until we find that it meets with our requirements, because our requirements for asset quality are very stringent, only then would we look at acquiring portfolios. So yes, in today's environment, there are many people who would like to give their portfolios to get over the crisis, but we are being extra conservative and, let's say, very careful.
Of course, you have very great business partners as well from the overseas market, where you can not only access capital at a lower cost, but the quality of marquee investors. So would you, so in this case, if I might just ask you a follow-up question, the quality of books will be the determinant whether you, and of course valuations, whether you go ahead and close the deal, but you would evaluate proposals as they come.
So quality of book, as you said, as well as the valuation, And thirdly, also the culture and how the people are, and what is the noise that we pick up from the markets of the quality of people is also very important.
Sure. Okay, let's move on, sir, from the sector at your own company. Again, a lot of interesting developments have happened. One key worry of the market, which is one particular large developer as your client, you have moved consciously to reduce exposure to that one particular client in the form of that transaction you've done. Earlier, you had addressed the market worries of the proportion of money from short-term paper. Now you've addressed this. So what was the thinking behind it? You want to really go back to the market and exactly tell in a very transparent manner how the business is panning out, right?
See, the whole market today, there is a lot of stress, and you know, even small issues get highlighted a lot, and people are feeling uneasy in the market. So we thought that we needed to correct this impression. So one of the things we did is that to really raise long-term resources. So since the end of September, we've raised 16,500 crores of long-term resources. These are either NCDs or they are term loans from banks or from institutions like the LIC and so on. So we've replaced the short term with long term, and we are continuing to do this as we speak. In addition, there was a lot of uneasiness as far as one developer, which was Lodha, was concerned. And we said that we will bring down this exposure. And the proof of the pudding is that the quality of asset and the quality of loans that we'd given to Lodha was good. And therefore, we have now been able to bring that down successfully. And from a 4,000 crore plus exposure, we have said that by the end of this year, we'll bring it down to 1,800 crores. And even in this current quarter, we are bringing it down to about 2,500 crores. What is more important is that we've got some of the best marquee investors to look at it, and Goldman is one such name as well, which is coming. And therefore, it just shows to some extent that the quality of underwriting was good. But I think the reason why we really wanted to bring it down is to give the market an assurance that this is a high quality asset which can be brought to a more regular level. And now we have said that going forward, we will limit our single borrower exposure to less than 10%.
Sure. And of course, business is about learning each day, so one can always go behind it. So talk to us about the priorities of the group right now, because last 6-7 months have not been easy for the sector, for the company. So from here on, how does the roadmap look like?
So the priorities as far as the financial services is concerned, one of the things that we realized in all this time, because we also raised long-term, people did a thorough diligence of our books, is that the quality of assets that we have is high class, and therefore the underwriting that we did was good. So in that sense, we feel confident that even in a very stressed environment where there is so much of pressure all around, our quality of book remains good. And we have not, so one of the lessons that I've learned is that what we have done till now, as far as underwriting is concerned, has been good. Second lesson I think we have learned is that we should be more conservative and have more long-term funds. And now even the RBI has put up a new policy document, which in some ways will also push us towards that. So we would rather err on the side of conservatism. Third thing we have learned is that the single borrower exposure we will bring down, because it creates, as I said, unnecessary pressure in the market. Fourth is, I think we knew this, and this only gets further actually amplified, is that it is always better to be conservative in your debt equity ratios. So when we raised 7,000 crores as equity a year ago in 2017 October, I think at that time people said that why are you raising so much, because you will be bringing down your returns on equity. I think those were measures which were good, that have steered us in good, and therefore I always believe that the old adage which I had learnt growing up in businesses, that you should always raise money when people ask you why are you raising it, not when people ask you why not. And final thing I think we've also learned is that the policies which we had as far as risk and legal are concerned, and this is right from the inception, we had said that risk would report directly to the board and not to the business.
And now
RBI has also said it. So this again, it's better to be more conservative.